Do these companies, in the face of reduced passenger and carriage, how do they slow their cash burn? What would you suggest they do, to the extent that they haven't already done it?
Well, one of the most helpful things they can do is stop buying new planes. And you saw Delta bring its CapEx on new planes down to almost zero in this quarter. So that's a big help. But the thing I would caution about extrapolating that into future years is they're not actually canceling those plane orders. They're just pushing them out into late next year or 2022. So
do they have a lot of planes?
Now
do they have a lot of planes that they're obligated to buy? Do they have a lot of planes that they're obligated to buy in 2021?
Yeah, they don't fully disclose what the restructured delivery schedules are, but if you look at, like Airbus's order book, it looks like, the Delta and United have the same order book now as they had back in January before the pandemic started. So it looks like they're still going to have to take those planes eventually. So what's helping them now is they bring down the spending on new planes. Eventually that's going to hurt them when that comes back and deliveries ramp up. Because I think the deliveries are going to start ramping up again much sooner than demand comes back from passengers.
The other thing that you point to a couple of things. One is the debt levels for some of these carriers. For example, Delta's debt is now $42.5 billion, up from $18 billion in December 2019. That's an item that they have to pay. They have to pay the interest on that debt. Did they borrow to get through the pandemic? Is that why they took on so much more debt, more than doubling?
Yeah, absolutely. When you're bleeding cash like they are, close to, my adjusted estimate is $29 million a day in the third quarter. The way you get through that is you borrow money because you're depleting your cash reserves through this pandemic. So that's obviously really tough, just the higher debt in itself, but also keep in mind that the interest rates for their new loans are generally double what they were before the pandemic, going from like 3% to 8% on unsecured debt.
So they've got more of it.
That's huge.
They've got more of it, and it's costing them more. Your only pick in this space right now, as I understand it, is Southwest. I guess that's because of their financial picture and also because they cater to leisure travelers as opposed to business travelers, whom you expect will come back more slowly, the business travelers, that is. Have I got that right?
Yeah, absolutely. I think the business travel demand picture is a lot more uncertain to me than leisure travel. I think when the vaccines start rolling out and people are comfortable that they can go to restaurants and tourist attractions on the other side of their flight, the leisure travel will come back pretty quickly. But I think the business picture is much more clouded because you don't know how many companies are going to say, hey, we don't really need to spend on business trips like we used to. Yeah. So that could be I think that's going to be a much slower recovery, probably at least 3 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.